Good morning. Today we're diving into a major story shaking up the Australian business landscape. BlueScope Steel, one of the country's most iconic industrial companies, is now at the center of a dramatic and unexpected takeover bid that's making waves across the nation. The company has confirmed it received an unsolicited offer from a powerful consortium late last year, sending shockwaves through the boardroom and the broader business community. But this isn't your typical buyout. The consortium is led by SGH Ltd, a major Australian industrial group, and Steel Dynamics, a leading US steel producer. Their plan? To carve up BlueScope's assets, potentially splitting the company's operations between Australian and American interests. The proposal has triggered urgent questions about the future of thousands of jobs, the stability of Australia's steel industry, and the broader national interest. From the halls of Parliament in Canberra to the steelworks at Port Kembla, the debate is heating up. BlueScope's official statement to the ASX revealed that the offer was made on December 12, catching many by surprise. The partnership between SGH and Steel Dynamics is seen as unusual, raising eyebrows among analysts and investors alike. The sheer scale of the bid has captured the attention of financial markets and policymakers. Investors are closely watching BlueScope's stock, while government officials weigh the implications for the future of Australian manufacturing and economic sovereignty. BlueScope isn't just another company, it's a cornerstone of Australia's economy and national identity. Its steel has built cities, infrastructure, and helped shape the nation's industrial legacy. That's why this takeover bid is about more than just business, it's about the future of Australian industry. As the board weighs its options and the nation watches closely, the next chapter for BlueScope Steel could redefine the landscape of Australian manufacturing for years to come. To grasp the impact of this takeover, you need to know BlueScope Steel. With over a century of history, BlueScope is Australia's largest steelmaker, behind iconic products like Colorbond and Zinc-Alum. Its Port Kembla Steelworks has powered Australian industry for generations, supporting thousands of jobs and entire communities. BlueScope's reach extends globally, with a major presence in North America, especially its highly profitable North Star mini mill in Ohio. This international success is a key reason it's now a takeover target. BlueScope represents Australia's sovereign capability in steel, a critical asset for national security and economic resilience. Steel underpins defense, infrastructure, and manufacturing. That's why the prospect of foreign ownership raises deep questions about Australia's industrial future. Who are the bidders in this high-stakes corporate maneuver? Let's take a closer look at the two companies at the heart of this ambitious deal, each bringing their own strengths and strategic goals to the table. It's a unique pairing, SGH Ltd, a major Australian conglomerate with deep roots in the nation's industrial landscape, and Steel Dynamics, a powerhouse in the US steel industry known for its innovation and efficiency. Both are industry leaders, but their ambitions and expertise are distinctly different, making this partnership especially intriguing. SGH, formerly known as Boral Group, has evolved into a diversified player in construction materials and industrial services. Over the years, the company has sharpened its focus on its core Australian businesses, building a reputation for reliability and quality across the country. Their experience in managing large-scale operations gives them a strong foundation for this bid. SGH's interest lies in BlueScope's Australian operations. By acquiring these assets, they aim to control the local steel supply chain, ensuring stability and growth for their existing businesses. This move would also help them strengthen their market position and secure a long-term competitive advantage in Australia's construction and infrastructure sectors. Meanwhile, Steel Dynamics, headquartered in Indiana, is recognized as a leader in efficient, low-carbon mini-mill technology. Their operations are at the forefront of sustainable steel production in the United States. SDI's primary target is BlueScope's North American assets, especially the highly profitable North Star plant in Ohio, which is considered a crown jewel in the industry. For Steel Dynamics, acquiring North Star means instant growth, a significant boost in production capacity, and the opportunity to eliminate a key competitor from the North American market. It's a strategic move that could reshape the competitive landscape for years to come. The partnership between SGH and SDI works so well because each company wants different parts of BlueScope. SGH is focused on Australia, while SDI is targeting the US operations. Their interests align without overlapping, making the collaboration both practical and powerful. Together, They've crafted a bid that splits BlueScope along geographic lines, allowing each to play to their strengths and pursue their own strategic vision. This innovative approach could set a new precedent for future cross-border deals in the industry. Why BlueScope, and why now? The answer lies in a unique convergence of market opportunity, strategic ambition, and the evolving landscape of global steel. BlueScope isn't just another steelmaker. It's a linchpin in Australia's industrial backbone, with a legacy of innovation and a footprint that stretches from the Pacific to the American Midwest. For SGH, the motivation is clear: dominating Australia's building materials sector and securing a reliable steel supply for its diverse portfolio of businesses. In a world where supply chain certainty is gold, controlling BlueScope means controlling the flow of steel that underpins everything from skyscrapers to infrastructure projects. BlueScope's assets, like the massive Port Kembla Steelworks and its extensive distribution network, are irreplaceable. These aren't just factories, they're strategic strongholds. Acquiring them is the only way to achieve true scale, vertical integration, and a competitive edge that rivals can't easily replicate. SGH also sees a golden opportunity to boost efficiency and expand into high-value products like ColorBond, which have become synonymous with quality and innovation in the construction sector. By leveraging BlueScope's expertise, SGH can accelerate growth and capture new markets. For Steel Dynamics, the North Star mini mill in the US is the real prize. It's a top-performing, highly profitable asset that fits perfectly with their strategy of expanding in the American heartland. North Star's efficiency and reputation make it a jewel in the global steel industry. Acquiring North Star means more production capacity, a stronger presence in the Midwest, and a chance to reduce competition in a fiercely contested market. It's a move that could reshape the balance of power in US steel. The timing couldn't be more critical. BlueScope's recent strong financial performance and robust market position make it an attractive but potentially fleeting opportunity. If the window closes, it may not open again for years. The consortium's split approach is a masterstroke. It allows each company to focus on what it does best, acquiring only the assets that fit their long-term vision, without the burden of managing unfamiliar or less strategic operations. It's a calculated move, meticulously designed to maximize value and minimize risk for both bidders. By sharing the spoils, they reduce exposure and increase the odds of a successful, mutually beneficial deal. Ultimately, this is a rare chance to reshape the steel industry in both Australia and the United States. An opportunity to set the agenda for decades to come, and to redefine what it means to be a global steel powerhouse. Let's talk numbers. The consortium's offer values BlueScope at $13.15 billion AUD, about $8.8 billion USD. The bid is $30 per share, a 26.8% premium over BlueScope's pre-offer price. That's a strong incentive for shareholders to sell. The board must now decide if this premium truly reflects BlueScope's long-term value. Remember, this is an indicative, non-binding offer, just the opening move. The board and advisors will weigh BlueScope's future prospects against the bid. Their recommendation will shape the company's fate. The stakes couldn't be higher for shareholders and the industry. This isn't a simple buyout. The deal is a two-step process. First, SGH Ltd would acquire all of BlueScope. Then, SGH would immediately sell BlueScope's North American businesses to Steel Dynamics. This lets each partner keep only the assets they want. SGH gets Australia, SDI gets the US. It's a clever carve-up, avoiding the headaches of running unfamiliar operations. But it's complex, with regulatory hurdles in both countries and execution risks. The board must consider whether this structure is truly deliverable. Success depends on navigating legal, regulatory, and operational challenges across borders. This takeover is about more than business. It's about Australia's industrial future. BlueScope is vital for infrastructure, defense, and national resilience. Selling key assets to a foreign company raises tough questions about sovereignty and control. For local industries, a change in ownership could disrupt steel supply, pricing, and investment. If SGH acquires BlueScope's Australian operations, it could create a dominant player, raising competition concerns. Regulators will scrutinize the deal to protect consumers and industry. The outcome will signal how Australia balances foreign investment with national interest. The world is watching how Australia handles this defining moment. Beyond the boardroom, thousands of Australian workers and their communities face uncertainty. BlueScope is a major employer in Port Kembla and Hastings. These jobs are the backbone of local economies. Workers fear cost-cutting, restructuring, and layoffs under new ownership. SGH will be under pressure to deliver efficiencies, but unions want ironclad job guarantees. The ripple effect could hit small businesses and entire regions dependent on the steelworks. Union leaders are demanding binding commitments to protect jobs and investment. The government will face pressure to make worker protections a condition of any deal. For many, the fate of these workers is the most important part of the story. The human impact will shape the public debate as the deal unfolds. With the $13–15 billion offer public, BlueScope's board must act. Their job? Decide if the bid undervalues the company or is a fair deal for shareholders. They'll weigh the risks, consult advisors, and may negotiate for a higher price. Even with board approval, regulators must sign off. Scrutiny will be intense. The public offer could attract rival bidders, sparking a bidding war. The coming weeks will be filled with uncertainty and high-stakes negotiations. The board's decision will shape the future of an Australian icon and set a precedent for the nation's industrial policy. All eyes are on BlueScope as the next chapter unfolds.